Good morning, this is Ron again. It's the 14th of October 2019. It's a Monday, it's Columbus Day, and I'm going to continue to move down my list of warehouse scans. I'm going to folder number 2, which is called the IR or Impulse Reaction Scans. This is something I came up with a couple of years ago now, and what I'm looking for is stocks that are in a strong uptrend or a fan uptrend, and they have pulled back from a recent swing high. This is the the end of day scan here. This is the intraday. Now, when you see something like this in using Thinkorswim for the intraday data, if it's blank, that means these symbols are not being tracked or recorded by Thinkorswim. So there's nothing wrong with HGSI. They're just not being or showing up in Thinkorswim. So you'll have the end of day quotes, but you will not have the intraday quotes on those. You can see that there are only 48 securities, and I'm in the all securities folder. I'm going to click on the first stock here, and you can see that this stock is kind of loose and choppy, and it's pulled back from a recent high. Now, to really illustrate this, I'm going to go into a different chart. I'll bring up the quick pick so you can see where this is. It's under folder number 3, and it would be chart number 3. Every time there is a green line, that means the conditions of the filter have been met. In other words, the stock is pulling back from a recent swing high. Now, this strategy requires that you wait for the prior day's high to be taken out, or you just don't take the trade. So in this instance here, where it pulled back several days in a row, even though the green bar is here, you want the prior day's high to be taken out. Even on this loose chart, it works several times. Here's a green bar. Nothing happened there. Here's another green bar here. But that high was taken out here too, and a few points were made on this. Now, green bar, there was an entry point there. And on this one right here, the entry would be today above this high. It looks like it's right up to it. It hasn't gotten there yet. So that's the way this strategy works. Now, what you're looking for in this is a really tight charts, and I'm not seeing a lot of tight charts here. But here's the green bar, an entry here, another green bar. The entry would actually be right above here. So this high at this point. So there would be an entry today on this. I'm not crazy about any of these charts, but in this wild environment, there are a lot of loose charts. So this is the end of day version. Let's go ahead and look at the intraday version today. Here's that stock that I just looked at. Let's look at NVO. And you can see that another loose chart. Here is the green pullback from this high. The entry would be here. So with a buy stop in place, this stock, if it were selected, you would be in. But once again, it's an extremely loose chart, which I don't like. Okay, I'm going to do one more. Kutera. Now you can see this is a much tighter chart, a nicer chart. And there is a buy point on here today. It pulled back from the prior day's high, swing high, which is right here. And the entry, the aggressive entry is above this previous day high, and the so-called safer entry would be above this high. So far today on this one, this is working out. This happens to be a stock that I've sold naked puts against, and I am slightly in the money. If it moves up a little bit more, it will not be in the money anymore, and I'll collect the whole premium. Otherwise, I'll be assigned on this stock, which is fine, because I wanted to get in to it anyway. My next view. Now this is the same thing, bull VPA flag, last 5 days, fan, uptrend. So what I'm looking for here is a bullish VPA flag over the past 5 days, and these stocks are in a fan uptrend. I made the warehouse view full frame so you can see what's going on. So this is the number of days since the last VPA signal with a 5-day window. 0 would represent Friday, 4 would represent 5 days ago, and on that stock that I looked at earlier, strength seen returning 5 days ago. I'll bring that up again. And this right here, strength seen returning after a downtrend, and then there's an effort to rise also, both of them on here. So this was a sharp pullback, and then the VPA flags were coming in to indicate that there was some demand. Once again, this is the end of day version. This is the intraday version. In a strong market, strong trending market, these scans work very well. They work a lot of the times anyway, but in a strong trending market, the odds are more in your favor. And this is just the reverse from the bearish side, fan downtrend. This is the intraday. You can see that there's a lot of weakness here today. And last 5 days for the bearish side. Let's just take a look at one of these stocks. I'm not familiar with the Keen group, but this is just the reverse. When there is a magenta bar and the low from the prior day is taken out, it indicates that that is a time to go short. Now back here you can see there was a magenta bar, but this just kept going up. So the lows had to be taken out for a short trade to be put on. I know that most customers do not short stocks. There's really much talk about it, but I wanted to have these balanced to make sure that there is both a long side set of scans and also a short side. That's it for the impulse reaction scans, and I'll be moving on down to the volume point of control scans in the next video.